Okay, Numan, we're live. It's great to have you as a guest speaker. So hopefully we will have people joining us on YouTube. However, because we had to change the timing a little bit, we will be videoing this, and the students and anybody else that wants to watch this will have a chance to see this indefinitely about us. So first, would you mind introducing yourself? Those that are interested in entrepreneurship probably know you, but we have also people from finance and other places. So who is Numan? And it took me a while to find out your last name wasn't actually just Numan.
All right. Adi, first of all, thanks for having me. It's a great pleasure to be with you again. Basically, my name is Numan. My last name is, again, starts with Numan and another 13 characters. That's why I shortened it, because I lived in Japan for 12 years after college. I finished the computer science engineering, then moved to Japan, lived there 12 years. Then later, I lived in US in 11 years. And basically, during that time, I worked at Dun & Bradstreet, then later Credit Suisse, then later Goldman Sachs. But everybody thinks that I'm a banker, but I'm not. I'm basically tech guy. I'm a computer engineer. I love technology. I always work in technology. I never work in finance. I work in Goldman, but I was always in tech division. And in 97, I basically started involved in tech investments with Goldman. Then later moved to New York, continued to do that. And in 2008, when the financial crisis hit, and I wanted to always work with the startup, so I left Goldman. And then in 2009, I saw the opportunity in Turkey, which was all greenfield, no angel network, no VC, no accelerator, incubator. So I thought that something can be done there. But if I want to do something, I had to move there. So I moved back to Istanbul, basically. And then
when you left Goldman, was there a nice golden parachute, or did you get an incentive to leave a little early?
I got a nice package, yes. I mean, it was, so that's why in 2009, I was more free to do test and understand what's happening. I basically advised several companies, one in Estonia and a couple in US, to do the market entry, product development, and those kind of stuff. So then in 2010, when I moved, I met with my partner Ali at first meeting of Galata Business Angels, which is first angel network in Turkey. Then we became basically start talking, and we decided, you know what, we want to raise the fund, and then it's not easy to raise a loan, so we became partners, and we decided to set up 212, which is the first VC in Turkey.
Yes, and not everybody knows this, but 212 has an interesting meaning. Okay, so what's the story?
So actually, I mean, it's basically, it all came out because of the desperation. I was looking for domain names. It's like every single word, even now, is like in that time, it was very difficult. Now it's even harder to find an available domain name with a proper, let's say, one word ventures, one word capital. Everything was taken. So I was thinking what to do and what kind of names we can have. Then later I said, hold on a second. My phone number in New York was 212, area code of New York. And Istanbul, European side, is also 212. And then I said, hold on. It's only two cities that both Ali and me lived at the same time. I mean, they're basically common cities are Istanbul, because I lived in New York, Tokyo, and Istanbul. Ali lived in New York, London, Singapore, and Istanbul. So we said, why not 212? Even our logo is like a 212, and then there's a shadow, so it's like a 212s there. So, I mean, desperation, basically. But so, actually, it is good, because now,
fortunately,
when you sort it out, go on.
No, fortunately, you didn't get one of the later numbers in New York, right? Because they switched.
Yes.
The newer people don't get 212 anymore.
No, it's 917.
Yeah, isn't that sexy?
No.
There was actually, if you're interested, there's a Seinfeld episode.
Yeah, I know. I used to watch quite a lot. Yeah. So I mean, actually, it's good because it's 212. When you sorted all the VC names, and in any event, we come at the top because we are number. So which is good.
Until somebody comes in and says, 100 or something like that.
100, yes. Yes. Then I will set up another VC 001. Anyway.
Okay. So ever since I've been interested in entrepreneurship, you guys have been around. So you were quite early into the Turkish entrepreneurship scene. And it was nice because to have a healthy entrepreneurship ecosystem, we need everyone. We need the ideas, the entrepreneurs, we need kind of a legal system, and we need the investors. So yes. Thank you for being there. And how do you see, the numbers have increased, but do you think there's still places where we're lacking?
I mean, I moved to Istanbul in about 13 years ago, and actually now nearly 14. And over the time, ecosystem developed tremendously. However, at the other side, we are still at the beginning. I mean, it's only 10 years old industry. So it's a decade old. If you look for US, like Silicon Valley or San Francisco area or New York area, Greater New York and everything, is about 30, 40 years old ecosystem. So, I mean, we are still at the beginning. If you think about the human life, I think we are still child position. I mean, and not even toddler. So we have a long way to go. I think we have a couple challenges, but I think it is growing well. It's not the speed that I would love to have, but it is moving forward, which is good.
So I believe you also have a kind of new fund which targets a different part of the entrepreneurship life cycle. Could you tell us?
I mean, Adil, it's all about basically understanding.
I think I'm having some.
Yeah. Can you hear me? Hello? Hello? Is it better now? Adil, can you hear me?
We're back? Yes,
I'm back.
Unfortunately, I'm at my office and the connection should be fast, but...
And he says, but, and then we lost him. Yes, he's back.
Yes, unfortunately. So to the IT department at Abdullah Gül University, please faster internet.
Yeah.
Okay. So I apologize.
No problem. So I mean, you have to understand, as a fund, basically we are operating in emerging markets, and in emerging market funds is basically we are having different kind of challenges, both fundraising side and also return the capital to our investors in a decent return, providing the decent returns to them. And in order to do that, for example, our first fund was $30 million. Second fund is 50 million euro. And we just had the first closing of the third fund, which is targeting the 70 million euro. But when you look for in US counterparts or Western Europe side, they normally set up like over $200-300 million funds, because so that they can have bigger teams, and then they can provide the multiple different services to portfolio companies, and then they can have the longevity of their products offerings. However, in our side, I mean, for me, we are investing in basically Eastern Europe, Turkey, and MENA, and our return should be minimum 3x of the fund, which is like in order to get the 10% of the top 10 percentile of the VC funds globally. So that's why we rather want to have the smaller size funds to address the basic market needs. That's why our funds will be always 70, 80 million size or lower than 100 million. At the other side, we also saw the opportunities in the other verticals, other kind of stages, because we were investing in the fund two with mostly in companies that they are ready to go outside of their boundaries, become a regional or global. And at the same time, we were also seeing a lot of tech companies that they were too early for us. So we used to put them in the watch list and monitor them every 3 months, every 6 months, and trying to basically mentor them, help them. And if they raise money or when they are ready, we invest in them. So what we did was, about a year ago, we started Simia, which is more accelerator fund. So we were able to invest in earlier stages, like a $350,000 to $500,000. And then we make an agreement with an accelerator called Alchemist. And then we were basically help them to mentor, and then we are Alchemist, and then have them to expand their international expansion. So that's basically how Simia born. And most recently, we also announced our next fund, which is Advanced Material Fund. One of the big corporates in Turkey, the holding, Akgök Holding, basically we've been talking with them, and then they came to us, and then we talked, and then they wanted to set up an Advanced Material Fund. And we decided to basically set up a separate fund, separate investment team, to invest only advanced material technology solutions globally, and fund will be about $30 million size. So that's why now we have 3 segregated funds with 3 different investment teams. At the bottom, we have the same finance team, same investor relations team, or same marketing team supports across the board.
So do all of these funds still go for that 3x kind of approach?
I mean, 3x is our approach because we like to be in the top 10% of the VC world. And first 2 funds are there. And I hope that Simia and next funds will be in there too.
Typically, I tend to hear a lot about the 10x group. Is that kind of top 1% then?
Actually, after top 10, within top 10%, it's basically multiples every year. We call it vintage, can be very different. Some funds can bring 20x, 30x, some fund brings 5, 6x. But let me give you one example. So 3x and above is the top 10%. Top 25% is 2.2x. And world average is 1.1 or 1.2x. So actually, we see business in hindsight is not a amazing return business. It's risky business. So we see is that can bring the good money, can continue to bring, because they make the name, they make the brand, and then good founders come, and then basically you want to partner with the good names. So let's say Anderson Horowitz, let's say Aydın Şenkut's Felicis or Sequoia. I mean, they are the brand names, and then it basically companies try to raise money from there so that they can go up to their ladder. And then we hope to be that in our region.
At one time, I remember numbers like 20% per year on dollar. And in,
Yes.
For example, your fund, your latest fund, how many years is the lifetime?
Fund lifetime is about 10 years, 5 years investment and 5 years is disinvestment, we call it. At the same time, for example, our first fund still alive. We have 3 companies left. We are about 4.5x on that fund. And our IRR, if we exit as of today with the current valuations, we will still have over 20% IRR, I believe.
Yes.
But also you have to understand the fund mentality and the fund financials for people who listen to us. Our investors commits to the fund, let's say 5 million, or let's say 2 million, 10 million, whatever. But we don't receive the money from day one. We receive the money when we do the investment. So that's why it's not from the day one that you receive 10 million and then in 10 years later you return 20% IRR. You don't calculate that way. So we calculate the IRR when we call the money, and then after that when we return the money.
Yes, and I think it would be very instructive to the audience to give them an idea about what the lifetime of a fund is like. So you're in your latest fund, you have the target of 70 million. This time it's dollars?
Euro.
Okay, 70 million euro. So, and when I had read in the news, I said, okay, they finalized it. So I said, wow, they've managed to raise 70 million. And I guess reality isn't exactly like that. So could you tell us a little bit about how things actually work?
Okay, so basically in the fundraising process is following. So as a fund managers or the fund team, we basically set up like a startup. We set up our deck together. We say, who are we, what we did in the past, what is our track record, what is our success stories. And we write also about the market, why we want to invest and what kind of investment strategy we will have, and then fund size and what kind of investments we do in which verticals, and then showing some of our expertise on those verticals. And we start talking with our investors. For example, in the second fund, we talk over 180 investors. And then out of that, 20 plus invested in us. But in third fund, we already spot about, I think, yeah, over the time in the fund 3, we already spot about 80, 90 investors. And then we have some of them basically saying that, you know what, let me wait until 24 because my cash flow is not there yet. Or somebody says, I will come to the follow-on rounds. So what you do is you basically talk with multiple investors and then you receive their commitment. We call them soft commitment. Let's say I speak with you, I explain the deck, I explain the 212 and everything. You say, fine, Numan, I will give you 5 million euro commitment. And then I collect 5 from you, 5 from others, 3, 5, whatever the numbers. And then at one day I say, all right, guys, I'm going to do the first closing, which means that I accept the investors to the fund, and then I establish the fund, which means the first closing. From that day, basically fund is ready. Fund has commitments, hard commitments, because we have legally binding agreement that you will send the money when we need the investment. Then we start basically investing the different companies in that time. In the meantime, we try to reach more money up to the basic target size or the maximum size of the fund, which is defined in our agreement. So our agreement says 70 million target, 90 million cap, which means maximum. I will not reach over 90 million because my proposal to our investor is like, okay, my target is 70. I have XYZ team members. I'm focused in these markets. Here's my accepted or budgeted portfolio, number of companies and everything. That's why 70 is good, but over 90 is different ballgame, different kind of fund. 100, $200 million funds are different. So I basically need to obey that agreement. Then over the year, over the 18 months, normally that's the rule, 12 to 18 months, you raise more capital. And then each time some more people commit, and then you do another close, and they say every 3 months, every 6 months, whenever and however you want. Then you accept those investors, and then they became this part of the same pool. Actually, let me go and then fix this slide because it's blinking. Just 1 second.
Okay. Meanwhile, I will try to form kind of a question about the way that the investments are made by not just you, but most VCs. So in the early years of the fund, typically you have the first investments being made. I don't know, typically 500,000, maybe to $1 million, maybe a little more.
So each fund is different, yes.
And then maybe you might invest, I don't know, in 20, maybe 30 companies at this level. And then that's not it. Some of them you leave to die if it's not going well. And then some of them get continued investments, second, third rounds. Okay. So has this also been typical for you in the Turkish experience?
Correct. It's very similar. So normally in first 5 years of the fund, we call it investment period. Again, depends on the fund. Our fund life is used always is 10 years, 5 years investment period. Another 5 years is basically disinvestment. and then we may have extension of the fund for 3 years, 1 year each, with the approval of our advisory board. So we have the life of the fund, but when we start investment, we go one by one, and then we start investing in the first 5 years of the new portfolio companies. In first 5 years, we can call money from our investors in following things: new investment, new investment to the new companies, or follow-on investments, management fee, and also fund expenses. But after 5 years, you cannot do the new investment. So you can only call money for follow-on investment, management fee, and fund expenses.
Okay. And this will probably bring some additional questions. So if in the audience, if you have questions, you can ask them in the comments section, and I'll try and bring them up. But for this one, I'll use my own prerogative. You mentioned management fees and so on. So how does a VC make money? Is it directly a percentage of the amount invested, or is it performance-based?
So basically, normally, I'm just again talking generally, is basically we have two
this doesn't necessarily mean 212 does it this way.
Yes. So normally it's 220. There's a general rule of 220, which means 2% management fee of the committed capital, and then 20% of carried interest, we call it, which means the profit sharing. So during the life of the fund, in each year you can get 2%, but in some countries, some places, you can limit that total management fee to the, let's say, 18%. So life of the fund, you can only get 18% of the management fee. And normally also in first 5 years during the investment period, that management fee is a little bit higher, but after investment period, that number can be lower. And then the profit is basically calculated following. Let's say our fund is 50 million, and then we made investments, and then let's say we got really lucky, company did very well. Year 4, we have an exit of $40 million. And then we only put 5, but we got 40. It doesn't mean that we have 32 million profit. No, we have to basically return that money back to our investors after 50 million. And then after that, when fund become profitable, then we will able to get our carried interest, which is 20%. But over there also, to complicate more, there is a calculation called hurdle rate. Most of the European funds, they have it, but American funds, they don't. American VC funds, they don't, which means that there's a minimum threshold that investors expect you to return before you get your profit. So normally this can be 1.25x or 3x, or sometimes yearly of, let's say, 8%, 5%, 10% interest.
So that's interesting, because with the average numbers that we were talking about, and when we look at academic studies examining, it's not a nice bell curve, is it? It's kind of way biased over here, and there's a whole bunch returning very little, and then there are some which are great performers, and they kind of increase the average. And everybody likes to talk about this extreme, but it's not always realistic.
It's not always realistic. No, I mean, it's as I said, I mean, global average of the fund return is 1.1x. So think about it. You raise the money, you basically invest in, and then 10 years later, you suddenly realize, oh, okay, I only got 1.1x of return of the fund. So my 50 million become 55 million. So you basically receive some management fee, which went to the expenses, salaries of the team, and all the other travel expenses and all, but you don't basically make money. I mean, so.
And it's also interesting, again, in the research, there seems to be things indicating that the initial time that the fund managers start going into this, they're most successful. And in the later ones, I hope this doesn't turn out to be the case for everyone. But the second, third, fifth, and so on isn't always as successful.
I mean, the key thing is basically able to, like in a startup, Adil, it's no difference, to be honest. I mean, I feel that I'm also a startup. Why? Because we started with 2 people. We didn't have any fund. Now we are a team of 15, 16 people, and we are good as our team is. So we need to have really strong team that can basically identify those companies and bring it, and then after investment, because I mean, identifying companies is one thing, but real work starts after investment. Actually, a lot of people think that, okay, you invest, fine, okay, no problem, you choose it. Yeah, there are some VCs also, we call it spray and pray. So you basically, you go to farming, you spray all the things in the field, and then you hope that you don't do the water, you don't do basically nurturing the plants, but you hope that something come up, and then you will do something. That's also ways that there's another way to invest, and some people are very successful on that. That's possible, but in emerging markets, it's very hard to do that.
Okay, so now we're starting to get some questions about our actual topic of the day. Let me bring a few up.
Saeed is very insistent on the questions.
Saeed is one of my excellent students, taking a few of my classes, and he's also got a few family members in the entrepreneurship world, I believe.
Mm-hmm.
And he wants to know about valuation, so he's also taking my valuation class and entrepreneurship. And obviously, in valuation of big, large, stable companies, it's kind of a different animal.
Mm-hmm.
So in startup valuation, how do you come up with the numbers? Because in valuation, sometimes we say it's more than an art than a science. In startup valuation, I'm not even sure we can say that.
I mean, it's not easy. First of all, I mean, you need to understand which stage you are investing in. It's because it's very different. I mean, seed stage is one animal, early stage is another one, Series A, Series B, Series C, D, and then later on it became 300-400 people company. Like insider valuation is very different right now. If somebody wants to invest in insider, they look very different things than
But they're not a
when we
startup
invested.
anymore. They're an established company.
Yeah, insider is a basically established company as a business. But when we invested in them, they were a startup. They had about $1 million revenue yearly, and they were growing okay speed. Now they have $100 million value ARR. So it's very different valuation method you use. So earlier stages is, as you said, is more than, I mean, is you can't basically put them in the Excel spreadsheet and said, oh, here is the valuation I basically put to this company. So it's multiple different things we look. I mean, instead of we focus on the valuation, what we try to focus is basically understand more about the founders, if the team can do the stuff what they are trying to do, if the team can hire people better than them to basically become a business, and then if the market will be basically big enough to bring them to do, let's say, fund returner for me. So which means I always look, when I enter the company, I always try to put the mindset of, okay, I'm basically entering this company and then I will get some percentage of ownership. And then after follow-on runs, at the time of the exit, with that ownership, is it going to return my fund or not? I always try to find out that. So for $50 million fund, I always try to see at the time of the exit, if I am basically owning 10% only, then company needs to be at least a $500 million valuation. So I always think, can they really reach that number? If they can, then I basically look, okay, how much should I get in that company? And then normally in Series A round that we enter, I mean, investors normally get anywhere between 10 to 20, 25% of the round size. So each round, 10 to 25%, right? So if I'm the only investor, I may get 20%. Then that 20% of money that I put, let's say I put 5 million, then company valuation is 25 million. Then after that, I end up basically looking at the comparables. Okay, they are asking 5 million. I need to get 20%. So is this company is worth, let's say, $25 million? I look for the comparables in the market here, market in Eastern Europe or MENA or Europe or US. So we try to find out, does it really make sense to value this company in that level? So it's not like a spreadsheet.
But still, for example, market size that they're trying to address, that they're trying to reach. What's a good source for market size? Is it established companies? Is it reports? Is it Statista? Is it?
I mean, I wish there is a one resource that I can go and say, yes, that's it. I can understand that. I mean, this is like basically saying that, okay, I'm going to open a restaurant in Istanbul, and then there's 18 million people, and then they all need to eat, and I will feed everyone. It won't work that way.
But now at least we have big chefs as a chain to kind of give us an idea about what could happen.
Yes, what could happen, exactly. That's why I look also the market, if they can really do this. That's also relative with the founders and relative with the market. Sometimes they can be too early to do this. Market can be too early, which we've seen the cases. Or sometimes market can be too saturated. Too many players there. So
I think that's what we are best at as Turkish ecosystem. When we see something successful, we're very good at copying and filling the market with clones. Like
clone is good. I love clones. It's all right. But I mean, because even if you say clone, but it's not exactly the same thing. They don't do the same thing. I mean, if you think about that, then Google wouldn't exist. When Google came out, they had hundreds of search engines and even very stronger ones. And that's why they actually couldn't they couldn't raise the money at the beginning. I'm okay with the clones, as long as you identify what is missing, what you can do better, and how you can do this.
But in e-commerce, for example, in Turkey, many of the clones weren't necessarily different, weren't necessarily better. After a time, initially we had some big, nice, successful ones, but when everybody starts attacking the field, and a market which might feed 2, 5, maybe 10, can it feed 100? Can it feed 500? Usually not.
And also, I mean, let's talk about e-commerce. We invested several e-commerce companies in the first fund. They all failed because what's happened was, I mean, there are a couple of reasons that we couldn't be successful. One of them is the market. The other one is our fund size, capital. In e-commerce, capital requirements are big. You need to fund the company until they are really big and dominant in the market. Like if you look for the companies that basically now still exist and then dominate the market, they've been here for a while and they raised a lot of money. Like Trendyol
and Alibaba.
Yeah, so you need to constantly raise money to do this. So when we were doing it, companies were doing well, but after Gezi protest and all the other stuff, most of our companies couldn't raise the follow-on rounds because our fund was $30 million. So, and then I can only invest up to $4.5 million to the one company because portfolio diversification. So even if company is doing really well, and I already put 4 million, I can't put another 3 million to the company to basically continue and then destroy the competition for next 2 years. I don't have the money to do that. So when I look at other investors, they don't invest. So what happens is good business goes down. So that's number one, smaller funds, we couldn't be successful. Second thing is, most of the competition in our region, I think I can easily say in GCC and MENA and Eastern Europe also, they compete with the price. Let's say I start selling this one for 100 TL and then you come to the market, you end up selling 95 TL. So you cut your profit margin. And I mean, you buy this one. This one cost you to 90 TL, and then you sell it only 5. I mean, less than like a 5% profit. You sell it, and you need to sell minimum 20-30% profit, so that because your operation, warehousing, and everything can basically justify this. But they think that, you know what, customer will come, but customer is very price sensitive, so they buy this one from you, your competitor, at 95, and next day somebody else comes in 92. Or 90 even. I saw that some companies selling at cost. So what happens is they can't survive that long, and then they kill each other.
And we even have some companies which use investors' money to burn and to do things at a loss, right?
But the thing is, I'm okay with that, because we invest in companies to execute and then grow faster. That's okay. But there is also a limit on that. And there is a smart way to spend on that. And we also enable our founders to do some small mistakes. I'm okay with that as long as they learn. But burning the money stupidly, it doesn't make sense. I agree.
So could you tell us?
Said has been asking if there is any easy forecasting the value of a startup. There is no easy way. No.
Why not just use Y Combinator? We'll give you 100,000 and we'll take 5 to 7%. That sounds relatively easy.
It is easy, but I mean, again, it works in US market because US market valuations are higher and their exits are higher valuations. I mean, US, you can easily see $10 billion IPOs, $30 billion IPOs. And when did we see the $30 billion IPO in Turkey? You are not. So that's why you need to understand where you are, your market. I mean, for example, let's talk about exits, or let's talk about valuation. I'm not talking about very early stage, but when we exit EasyCo was bought by PayU, and then when they were calculating valuations, there is basically their counterpart in Europe. Their revenue is X euro, and then their sales price is multiple of, let's say, 30. But when they wanted to buy EasyCo, they said, sorry, we give you multiple of 20.
Was that a Turkish discount?
It is Turkish discount because of the stable, is that it wasn't stable market. So that's the haircut you face it. That's the reality. So, I mean, for example, EasyCo, it was a very successful exit for us. It returned entire fund. It was an amazing company. It is still an amazing company. They continue to grow, and they returned entire fund for us. But let's do a little bit reverse calculation. When we invested in them, dollar was 1.7 TL. When we exited, dollar was 7. So, and then we had 1x return. So if dollars stayed the same, we could have 4x of our fund returned with one investment, minimum.
In TL, in Turkish liras.
In dollar way, no. If the TL stayed the same as the dollar, like it was in exit time, it was still 1.7, then we could have 4x of the return of the fund. So you have to understand that that's the risk that is basically emerging market is facing. That's why we have the haircuts or discounts on the emerging markets.
Yes, and I remember Barbaros talking about, I guess the investment just during Gezi, I think, when they had been given an offer, and it was, I think, withdrawn. Does that sound right? Or am I confusing my stories?
Yeah. No. It's correct. I mean, it was just basically they were raising the money, and there were 4 investors on the table. They give the term sheet, and then it was the coup attempt, was it 15 or 16? 15th of July. So 14th of July, Friday. So 15th of July, Friday morning, they got approval from BDDK, which is the regulatory
Turkish
body
banking.
that they basically got. Yes, they got the license basically, and then immediately that day 4 or 5 of the VCs, they called me. They said, look, we are ready to increase the valuation. Please talk to Barbaros. You should receive the money from us and all the other stuff. That night, coup attempt happened. Then on Saturday morning, they all sent an email. They said, sorry, we are holding our offer. We put them in the fridge, or some of them that freezer. Some of them totally take the offer. So, and then on Monday, or actually Monday, one of the investors came back. They said, look, we know the emerging markets. We've been investing in emerging markets. Give us 2 days. I will come back with the reverse offer. They came with a little bit lower valuation, and we accepted.
And they ended up still becoming quite successful despite those setbacks.
Yeah. So, I mean, but if this happens in US, you wouldn't see those kind of people will get panic.
In the US, it would be the end of the world.
Yeah.
You know,
definitely.
They've seen some things. It's not as stable as before. Yeah. So can you give us a few examples from like your first fund many, many years ago now? So, for example, valuations at that time, kind of, could you give us some names of your nice successful companies and maybe a few unsuccessful ones?
I mean, before the portfolio, let's talk about, I always give that example, right? Let's talk about Yemek Sepeti. Mm-hmm. You know, it's one of the very successful exits in Turkey. So they have been sold to the delivery hero for $680 million, right? As the public numbers, everybody knows.
85, 90, something, yeah.
Yeah. No, sorry?
685, 690, something in there.
Something like that, yes. So, and it was about nearly 30x of their revenues. All right? Their competitors were sold at the same time about 22x of revenues.
Competitors, so Bayer, internationally?
Internationally. Mm-hmm. All right? And because Bayer wanted to really want to enter the Turkey and other regions that Yemek Sepeti was dominant, and instead of going head to head with Yemek Sepeti in those markets and fight them, they said, you know what? Fine, I give you extra multiples, I buy you. Right? And it was the largest exit in Turkey, and it was an amazing news for everyone. Agreed? So yes. That one is basically, how do you justify 30x? Is it too low? Is it too high? Because buyer wanted to buy it, and
bargaining power.
And they want marketing power.
Bargaining.
Bargaining. But look what happened after that. They bought it. Within a week later, Delivery Hero's price valuation went up $1 billion. So, and then by the way, the company who bought Yemek Sepeti, 13, 14-year-old company, was only
it was younger.
Yeah, yes. 3-4 years old company. So again, its valuation is all about, I mean, that when I invest, I can't control the exit valuation. I can only control when I am entering. So exit is all about how desperate the buyer is and how the market is playing. Look at what's happened Klarna. In US-based, basically payment service provider company. Sequoia invested in them at $40 billion, 49 actually. They were raising money at $49 billion. SoftBank was about to invest. And what happened recently? Sequoia came back and invested again at $7 billion valuation. 7x lower.
Klarna was actually where Barbaros had originally come from.
Yes.
He was working there, and then.
So valuation is basically, it is an interesting times. I mean, when the market is down, when the things are, when the money is tight, valuation is always getting lower. I mean, some of the things that basically used to be in the past, such as like SaaS companies, software as a service companies, they used to get 15x, 14x of their revenues, yearly ARRs. But now 8x, 9x is normal. Even they are growing double every year.
Turkish or international?
International. I'm talking about only international numbers.
So, again, it's not a DCF. Continually, we hear multiples, relative valuation, and
It's
not
basically
even PE.
no,
We're talking about revenue multiples
no,
because these are startups, right?
yeah. I mean, it's basically as where you are in which market you are operating. For example, when we invest in EasyCard, they were only in Turkey. We enter a valuation with multiple that was the set for Turkey. Now, when Qatar Investment Authority invested recently, Sequoia's revenues, sorry, not Sequoia, insider revenues is very small percentage comes from Turkey.
Uh-huh.
So it's an international company now. It's all dollar-based revenue. So it's very different play game. I mean, I know that some of your students are asking. They are expecting me to say, "Here's the formula. Here's what we do," but I don't have secret. I don't have anything. I mean, seriously, it's not a basically formula or secret Excel spreadsheet we have, and we put the numbers, we put the basically market size, and then we do research, and here $20 million valuation. No.
But for example, that there's a lot of interest in, for example, game companies, right?
Yes.
In once we had the nice purchases, Peak Games and others, so everybody now wants to get into this. So for a company producing games, for example, is there kind of a number that people have in mind?
I mean, I haven't invested in games since 2013, so I can't really say that much. And also, gaming industry changed tremendously. I mean, it is gaming nowadays. It's all about basically understanding the trends very well and having a really strong team. And then, if team is really good, then they wait until they're about they only raise about 50 or 60 million dollar, not less. So they are ready for the big distributions, big games. It's not like a very early stage. I don't see that much nowadays.
Raising 50, 60 million valuation or financing?
No, round size, yeah. I
Round
mean,
size.
yeah.
So their
I mean,
valuations
thing
must
is,
be pretty big.
it is. Why not?
Yeah.
I mean, again, it's a different word. That's why I'm not
It's
expert in
bigger than
gaming.
movies.
Yes.
Yes.
But
Okay.
again, I mean, it's all about how far and how big you can reach. For example, in insider case, each round you enter, like they had A, B, C, D round, and then E rounds. Each round you enter, you basically look where they are now, and then what they did until now, and then you say, okay, where they are trying to go, or what is the target, and what will happen in next 2-3 years. You can only with a nice dream of, okay, 10 years later I will be in that level, but most of the time it won't happen. So you always look very like a 2-3 years down the road.
How about giving us a little taste of honey? What are some wonderful stories that you have collected over the years? For example,
I
the
mean,
beautiful ideas, the nicest ideas that became successful, and maybe some that, went up in flames.
The up and flames were mostly various different reasons. Which we can talk in the downsides, but in the upsides, I love to be being with the right entrepreneurs, and I love to be in basically working with them and help them to be successful. Tyson and Barbaros is amazing founders. Same thing for Insider team. Same thing for Hotel Runner teams. They are basically doing amazing job in the first fund. And second fund is that we have also the amazing founders. And also first fund, we had amazing founders, but some of them didn't do well. Like Butigo team. They had an amazing product. They had a good market fit, fast fashion shoe manufacturer. But market didn't happen, and then it was all about the price, and we had to shut down. So it's not about the founder is being mean. It's all about basically sometimes market change, or sometimes founder comes to this level that they cannot do more than this, but they try to do it and it fails. So it's various different things. But for me, it's a good success story. I mean, I'm still in love with where EasyCo is now, for example. I mean,
And
now
also these
Nardos
investments,
is based. Yes.
yes, these investments are quite different than each other. So you have
Yes.
EasyCo, fintech company, right?
Mm-hmm.
And then you have Hotel Runner, which basically helps hotels get rid of their empty rooms at the last minute.
Mm-hmm.
And then what was the other one you were
Insider
mentioning?
marketing tech.
Insider, right? I'm just amazed each time I listen to Hande or somebody from
Mm-hmm.
Insider. How can they work so hard and so long and still, be
Yes.
healthy?
Yes. It's amazing. I mean, and our current portfolio companies like Trio Mobile, like Fazla, like Sokradar, or like MolIQ, Bolt Inside. I mean, those are all amazing companies, and founders are basically always trying to do something better each time. And for me, it's an amazing journey to be with them.
Isn't it difficult to invest across so many different areas?
In first fund, we did that, and we learned that it's basically the first fund was B2B, B2C, and gaming. So we had like all over. We were sector agnostic, and we were in that time, year 2011, we started. First investment was 2012. We believe that the Turkey is a good market, and we need to find a good entrepreneurs that can basically dominate the Turkey and grow it outside of Turkey regionally. But what happened was we learned our lesson, and with the fund size that is basically right for the region, we decided not to invest B2C solutions after that. So we focus only in B2B. And even B2B, we wanted to basically narrow our focus on the enterprise software, fintech, marketplaces, cybersecurity, the areas that we know well. So that's how we basically narrow down on there. For example, if we receive some healthcare solution, I mean, I know a little bit about healthcare. I can check some of the hospitals or some of the doctors, some of the different things, but I'm not expert on how they can expand in Europe or US. So I go in that time, our partners, VCs in US market or European market, and check with them about company and marketplace and what's happening there. And then I try to understand if it's the investable company or idea or not. Then later we move forward or not. So we narrowed down our investment strategy with the second fund, and third fund, we will continue that. But
Okay.
I mean, B2B in general is very, very similar, because the way that you sell it to the Turkish corporations are very similar to the US corporations. You just need to understand some of the nuances in each market. That's it. Once you get it, it's very easy because they use the same software. The way of to do the business is very similar. For example, Trio Mobile. Workplace safety is same here in, let's say, Arçelik factories, and it's same as the Amazon warehouses or Coca-Cola warehouses in US. You need to provide the same solutions.
Okay. Well, it's interesting. I'm sometimes amazed by how I don't know. Sometimes I hear the stories of a company, and I don't realize how big it can be. For example, when I first heard about OpsGenie,
Mm-hmm.
Berkay's company, and
Yes.
a close friend of mine was going to work there, and I said, interesting. Yeah, sounds good. I never thought it would be this big. I didn't think the problem was this important to solve,
Yeah.
to become a $290 million
I mean,
problem.
that's why I love B2B, because from far, it doesn't look that sexy. I mean, everybody is basically thinking about some like a B2C solutions or e-commerce is everywhere and this, but it has also that difficult to basically dealing with the consumers and everything. But B2B, I mean, you don't need to have 5 million customers. You need to have only 3,000, and then you can make $30 million revenue yearly. So that's why I like it. And a lot of people don't think that it's basically very attractive business because it takes enterprise solutions. It takes anywhere between 3 to 9 months, or even sometimes 12 months to sell to the enterprises.
Yes.
But once you are in there, once you are in that factory, you are there for at least 3 to 5 years, even longer sometimes. But consumer, I buy this one from Amazon today, and then next day I can go and then buy from Trendyol.
Yeah.
Consumer is
No
very
cost to change.
Exactly.
And I also love the fact that this is where the experience comes in, right? The knowledge about the sector, about what is their pain, which somebody fresh out of college, youngster, might not see it. But if you've been there, if you've worked there, if you felt the pain, you understand that, hey, if this can be solved, it can be very valuable, right?
Yes. That's why I think sometimes fresh out of college, it may help to basically work in a startup and learn this one, or enter a business and work there and understand the problems. And then after you learn the problems, understand the problems, it's better to start a company.
So make mistakes with somebody else's money.
Yeah, that's it. That's true.
Okay. Numan, thank you for this. Saeed, also thank you for your contributions, for your questions. Numan is with us from far away, and he has a lot of important VC stuff to do. Find investors, make investments, make money, Numan. So thank you for this. And is there anything that
he has one more question, I think?
Yes, let's bring it up ahead.
On a small budget
budget
investment today, are you planning to do anything in this field that you want?
Like crowdfunding or?
I don't understand the question. Do you?
7 years ago in Collective Explorer. So apparently he or somebody he knows asked you this question, I'm guessing this is probably something like crowdsourcing, crowdfunding.
For me, it's like a small budget investments. Basically, in this business, investing in startups is feels to the alternative investments. I know I'm contradicting my investment thesis to my investors, but it is very risky business. And alternative investments, in this group of alternative investments, we have VCs, PEs, hedge funds, and some other multiple different investment methodologies there. And normally family offices or institutional investors, they only allocate about 10 to 20% of their money to their investable amount to this vertical, and then they divide the multiple companies. For example, our investor invest in us because we build a portfolio. I mean, in our first fund, we invested 12 companies and only 4 of them were successful. In US average is 50% goes down. And then maybe 20 to 40%, they got 1 or 2x returns, smaller amount. And then 1 or 2 of them, 10%, they do really well. So that's why they get 3, 4, 5, 10x of the returns. Yes. So that's why I build a portfolio. So to basically having a small amount of money invest in funds will be best. Or alternatively, if you want to invest directly, then you need to build a portfolio at least 20 to 30 companies. Like if we have some angel investors around, and then with 1 investment or 2 investment, it's not an angel investment. It's just you are investing in 2 companies, and then the possibility of their failure is very high. But if you make an investment over the 3 to 4 years like we do for about 20, 30 companies, one or two of them will be do well, hopefully, and then you get your money back from there and you make profit from there. That's how I would recommend.
One of the things I had heard, and this wasn't from the VC side, but from those family investment funds, was when the stock market, when prices fell in the regular stock market, this created a problem in in your funds, because rather than 10% being held in these risky startups, which had not lost value, interestingly, it started to become 20%, 30%, or more of their fund. So then they start to say,
and they suddenly said, I don't want to invest. Yes.
And then, so I need to get rid of some of this. But that was the successful
or not
side.
Invest, not only invest and not only get rid of it, but not invest more. So that's why in US now, and actually in our region also, we are seeing this, VCs are having a hard time to raise the next funds. It's not easy.
People have lost from other things, and they don't have
their
the money
allocation to the alternative assets got bigger.
Interesting.
Yep. So macroeconomics play with us tremendously.
Yes. Well, Numan, thank you for this, and
thank you.
I hope to do many more of these, and perhaps if you restart your podcast series, maybe we might be able to join into those as well.
I would love to. Yes, I would love to do that. I mean, once we have some little time, I want to start doing this one, hopefully. So thank you for having me, Adil.
And to 212 and to other VCs and even PEs, keep in mind that Abdullah Gül University is in Kayseri, where there's very good food. It's a great place to visit. And
I would love to come,
happy to host you here.
Yes, we'll do. Promise.
All right.
You have my
It was
word.
great.
All right.
It was great talking with you, seeing you again, and have a great meeting with your investors.
Thank you, Adil. Have a nice day. Bye, everyone.
Thank you.
Thank you.